Good morning, viewers. It's Wednesday morning, March 12, 2025, and I'm your host, Sunil Thakker, or Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Stocks bounced after briefly breaching a key technical level, but a 3-week stretch of high volatility in US assets showed no signs of abating. The S&P 500 index dropped as low as 5,528 points, briefly marking a 10% fall from its record closing high of 6,144 on February 19, which is commonly known as market correction. Global trade tensions fueled a wild day on Wall Street, with major indexes finishing a choppy session lower even after signs of a thaw in talks between the US and Canada. President Trump's move to ratchet up tariffs on aluminum and steel from Canada triggered a new round of losses early in the session, sending all three major indexes lower. President Donald Trump said he would double tariffs set to take effect within hours on all imported Canadian steel and aluminum products to 50%. The latest tariff threat added to investor unease that Trump's trade policies, which include tariffs against Canada, Mexico, and China, could trigger an economic slowdown or cause a recession. Stocks regained some ground after reports that Ontario would axe a surcharge on electricity delivered to the US, and Trump said he would probably cut back the increased tariffs, adding to the positive momentum. Ontario's premier said he would agree to suspend the Canadian province's 25% surcharge on of electricity to Michigan, New York, and Minnesota. Later, equities pushed away from session lows after Ukraine said it's ready to accept a US proposal for a 30-day truce in Russia's war. Stocks gained some traction after the US agreed to resume military aid and intelligence sharing with Ukraine immediately after talks in Saudi Arabia, in which Kyiv voiced readiness to accept a US proposal for a 30-day ceasefire in its conflict with Russia. The Dow Jones Industrial Average fell 1.14% or around 478 points to 41,433. The S&P 500 lost 0.8% or 42 points to 5,572, while the Nasdaq Composite ticked down 0.2% to 17,436. All three indexes notched their worst two-day drop since August. The S&P 500 is down 5.3% year to date and is down more than 3.4% over the past two sessions, its largest drop since early August last year. Wall Street had hoped that tax cuts and regulatory rollbacks could spur another year of stock market gains, but uncertainty around trade policy and around US tech companies' competitiveness in artificial intelligence have left the US shares trailing global stocks in recent weeks. Tariff uncertainty has also weighed on consumer sentiment, with company executives increasingly flagging the impact it can have on upcoming earnings. Investors need to brace themselves for uncertain times ahead. There was one sign of economic health on Tuesday that provided salve for investors. New Labor Department data showed that the US had 7.74 million job openings in January, up from 7.51 million in December and slightly above consensus expectations for 7.6 million openings. Each of the 11 major S&P sectors was lower, although technology and consumer discretionary sectors, the two worst performing sectors on the year, saw the smallest declines. Big tech stocks started to recover some of the losses throughout the day. Tesla shares rose 3.8% after the EV maker shed 15% of its market value on Monday. Broadcom also climbed 3.1%, while other tech stocks like Intel fell. Teradin was the worst performer on the S&P 500, followed by Expedia and Delta. Airline stocks were volatile after Delta, American Airlines, JetBlue, and Southwest cut their forecasts amid concerns about travel demand, but Southwest unveiled moves to boost revenue, lifting its stock 8.3%. Delta Airlines stumbled 7.3% after the carrier slashed its first quarter profit estimates by half. American Airlines slumped 8.3% after the carrier forecast a bigger than expected first quarter loss. Weakness in airlines helped send the Dow Transportation Index down 3.1%. Verizon shares dropped more than 6% and were the weakest performer of the Dow's Industrial Tuesday after a company executive flagged heightened industry competition at an investor conference. Coles forecast a bigger than expected drop in annual comparable sales, sending the retailer shares plummeting 24.1%. Dick's Sporting Goods dropped 5.7% after the retailer forecast downbeat annual results. Oracle lost 3.1% after the cloud company missed quarterly revenue estimates. Citi became the latest brokerage to revise its stance on US stocks, downgrading its recommendation to neutral. The CBOE volatility index, known as Wall Street's fear gauge, because it tracks the cost of options used to protect against stock market downturns, hovered around 27 after spending most of 2025 under 20. Elsewhere in the markets, the yield on the 10-year Treasury rose to 4.286%, having slipped on Monday to 4.21%. The US dollar weakened against most major currencies. Bitcoin traded above $83,000, having slipped below $80,000 on Monday. In commodities, West Texas Intermediate crude rose 0.6% to $66.4 a barrel. Spot gold rose 1% to $2,918 an ounce. A reading on consumer prices on Wednesday will show if progress is being made on tamping down inflation. That's it for today, my dear viewers. And if you are enjoying our content, please do subscribe, like, and share this video as much as possible. I will see you again tomorrow morning. In the meantime, happy investing. Stay inspired and remember, it is all about money.